The Dallas metropolitan housing market has been ranked the fourth hottest market in a recent report by Zillow. In this video, we're going to be looking at why Dallas got such a high ranking and where the Dallas market could be headed in the months to come. Let's get into it. Welcome to Real Estate Watch, the channel that focuses on forward-looking real estate analysis for the U.S. overall, as well as regional markets like Dallas. If you're new to this channel, my name is Eric and I am a private sector economist in addition to being a licensed real estate agent. So I bring a unique perspective that you'll be hard-pressed to find elsewhere on YouTube or other platforms. I dig into the data for myself and give you the critical insights into the national and regional real estate markets. Today we're looking at Dallas, ranked the fourth hottest housing market in a recent report by Zillow. Let's get straight into the data and see why Dallas deserves such a high distinction and where things could be heading in the months to come. The Dallas median home price has dropped by 1.8% from the peak in May 2022 through January 2023, the latest data available from Redfin, a national real estate brokerage. That's doing pretty good compared to some other metropolitan areas in the country, like the San Francisco Bay Area, that has seen the median home price plummet by 16.3% from its peak last April through December. Compared to other large Texas metropolitan areas, Dallas is also doing fairly well. Austin has seen a 10% decline since its April peak. Houston has done a bit worse than Dallas with a 3.2% decline, and the Fort Worth area is one of the bright spots in Texas with just a 1.6% decline from its previous peak. At this point, you might be asking why Dallas has been ranked one of the hottest metros in the nation when prices are heading lower, and it might come down to being one of the least worst areas in terms of price performance. But price performance is not the only factor that Zillow considered. Local economic fundamentals like the labor market also factored into their rankings. Let's take a look at the employment numbers for the area and see how those are stacking up. Looking at the year-over-year growth in non-farm payroll jobs, Dallas is now the leader of the pack in Texas, coming in at 5.9% as of January, surpassing Austin at 5.6%, Fort Worth at 5.3%, Houston at 4.9%, and the Texas statewide average of 5%. You can see from the year-over-year growth rates during the pandemic period that Austin has consistently been one of the fastest growing labor markets for major metro areas in Texas, but Dallas was coming in second the whole time. So these main data points over the last year are a big reason why Zillow ranked Dallas as the fourth hottest market of 2023. The price declines have been very mild and job growth has taken the lead for major metropolitan areas in Texas. Now let's switch gears a bit, look forward. To get a sense of where the Dallas housing market might be headed in 2023, let's take a look at the underlying supply and demand statistics and where things are trending. On the supply side, we've seen inventory levels steadily rising over the last year, but have shown signs of tightening in the last few months. New listings, while down, aren't reaching the low points we've seen over the last 2 years. This series is fairly volatile, but the broader trend suggests that sellers aren't staying on the sidelines as much as other areas where new listings have basically collapsed. On the demand side, transaction volumes continue to head lower with little sign of leveling out or heading higher right now. Further weakness in demand is readily evident from the average number of days that homes are staying on the market before selling, as well as the sales to list price ratio that is returning to pre-pandemic averages from the sky-high levels it reached the last 2 years. So what we're seeing in the market fundamentals is that inventories remain relatively tight even after the rise of the last year, and this has prevented prices from falling too much. We have yet to see a slowdown in the deterioration of demand. Based on these, I would think that prices are likely to continue to trend lower in the months to come until demand firms up a bit. And to get a sense of where we are on that, I like to look at how the affordability in the area is trending. This is the average housing payment as a percent of the median household income for the Dallas area, and as of January it stood at 37.7%, down slightly from the recent peak of 40%. As you can see, homes have become more unaffordable than at any time in the last 20 years. I'm willing to bet that if I was able to put together a longer time series, we wouldn't see anything like this level for this metric in the past. This shows how out of balance the market has become due to the surge in mortgage rates over the last year, and this has been why demand has been so weak. Before the recent surge, 25% was the highest this has hit for the Dallas area. So for the market to come back into balance, we will need to see either a surge in income, which is unlikely, a crash in mortgage rates, which is also unlikely given that the Fed still hasn't finished with their interest rate hikes. If you want to know more about my outlook for mortgage rates, check out the video I did on that earlier in the year. I'll put a link to it in the description down below. So the only variable that is left to bring affordability back into balance is price. A drop in prices is the only thing that is going to bring affordability levels back into balance. And for the sake of argument, let's take a look at where prices would have to go for that to happen. Let's assume that 25% for the average housing payment as a percent of median household income is the upper bound of a balanced market, which isn't too much of a stretch, given that this was the highest we've seen before the pandemic. If mortgage rates stay around 6% and income grows in line with the historical average, then the median home price would need to decline by 30% in order for the average housing payment as a share of median household income to reach the previous peak of 25%. Now, I'm not saying that's what's going to happen, but it does show how out of balance the Dallas market is right now in terms of affordability. One of two things is likely to happen in the months to come. Either the market is going to freeze up if sellers aren't willing to lower their listing price, or prices need to come down. That is likely going to be the case for much of 2023, given the mortgage rates aren't likely to start declining noticeably until the final quarter of 2023. And that's where we're at for the Dallas market. If this video gets enough traction, I'll release some updates as new data comes in. So make sure you're subscribed and hit that notification bell down below if you like what you've seen in today's video. I also release videos on where the US overall is trending, as well as other major regional markets like Austin, Texas, Seattle, Washington, and the San Francisco Bay Area. I'll also be providing updates to my mortgage rate forecast a few times throughout the year, as well as new data comes in. Plenty of content on the way, so make sure to subscribe so you won't miss it. And before you go, please leave this video a thumbs up to support the channel and help it grow. Thanks for stopping by, and I'll see you in the next video.